This is Great Day Houston, hope after Harvey.
We are coming to you from the Houston Area Food Bank, which is the largest food bank in North America. Now, any given day, this food bank is busy, but after Harvey, they're even more busy. And a little bit, we'll share with you how you can get help with putting food on your table. By now, a lot of you are feeling an extra squeeze on your pocketbook. So what we want to do with this show today is help you find some relief in terms of what money might be out there for you. And in extreme cases, some of you might be considering bankruptcy. What does that mean? We'll share that with you in just a minute. Our first guest today is a CPA and also the head of Trippon Wealth Management, Jim Trippon. Good morning and thanks for joining us.
It's great to be here.
All right. On any given day for you, you help people with that so-called, for lack of a better term, the rainy day fund.
Right.
And this is what you mean by that.
Because, it's been really raining.
Even if you have insurance and the whole bit, people are finding that it's not enough, and it's not enough right now.
Right. Well, that's the big thing, because on insurance claims, they don't necessarily just walk out and hand you a check. It can take you months, maybe 2.5 months. Even with the Texas laws on prompt claim settlement, it can still take a couple of months to get your money.
Yeah, all right, FEMA. We know there's a lot of money out there, a lot of money out there, but people are having trouble understanding how to access it and who can access it. And there's different categories, different buckets, as you described it earlier, on those disaster loans. So let's go through some of those.
Right, so basically there's 4 fundamental programs people can access. If you're completely wiped out, you have no reserves, you have no savings, FEMA offers certain vouchers for temporary housing, for food, and that is an immediate stopgap for people that may be stuck in a shelter.
And let's make sure people understand what this is. It's like it may pay for a few days of a hotel or something, and sometimes people confuse that and think, well, are you going to pay for my house?
Right, no, absolutely not. So it doesn't do that. And the way to access that is either to go to one of the shelters that has a FEMA sign-up facility there, or you can go to disasterassistance.gov and do it that way, or you can call into their toll-free line. Yeah,
and they've said over and over again, before we can even begin to help you, you have to sign up. You have to register and do that online. All right, there's also help for businesses.
Right, well, and even for those people that don't qualify for the vouchers, if you've had a lot of damage to your home that's not covered by flood insurance, maybe you don't have flood insurance, or maybe you didn't have enough flood insurance.
80% of the people did not have flood insurance.
Right, so the SBA, FEMA through the SBA makes direct loans for homeowners, and it's at up to 30 years for renovations or contents that are not insured, and it's at an interest rate of only 1.75%, so that's excellent.
Yeah, but people have to remember that is a loan.
That is a loan. You do have to pay it back, but the rates are very low. Yeah. Now, for business owners, it's a little different. They have 2 programs for business owners. One program is if you have physical damage to your business, you lost inventory, the place flooded, you have roof damage, whatever it is, they will loan you up to 30 years for that at 3.3%. It's a loan, not a gift, but it will help you get back in business. The other one is the economic impact disaster loan, and that is also for up to 30 years, and it's also at 3.3% fixed, so it's cheaper than you can normally get at a bank.
Because every business was closed during this.
Every business was closed, or even if the business facility wasn't damaged, the employees can't get to work. The customers are not available, and that's going to go on for a while. And all these programs have deadlines, but the big thing that people don't realize is the deadline is not enough because there's limited allocations of funds.
So it's a fixed amount of funds, so kind of like first come, first serve?
That's exactly what happens. So right now, we've had estimates in the media that it's going to be up to $100 billion to solve all this problem, right? But they've only budgeted 20% of that.
Wow.
So if you're thinking about applying for these funds, you need to do it right away, because first in gets that money. If you apply before the deadline is up, but there's no allocation of money, or they've used all the money, you're out of luck. You're really up a creek.
Like you were saying, the analogy, you go in for the turkey sandwich sale, right?
Right.
And then if you're the last in line, they're out of turkey, then you're not getting that turkey sandwich.
Right, I mean, you got your little number from the deli counter, but they're out of food.
Yeah.
It doesn't help you much.
All right, what about people like landlords or people who had a home that they were renting that was flooded, so it's not their primary home?
Right, so if it was your primary home, you can claim under the physical damage for a homeowner, which is the 1.75% SBA program. If it's a business property, including a rental property, okay, then that would be under the business disaster loan program. So it's still eligible, it's just a slightly different interest rate.
Yeah, all right, when you say the word loan, the first thing that comes up is what's your credit rating?
Right.
So what does it take to get these loans?
From what they won't tell you over the phone, but what they tell me hush hush is basically they want something above 600, usually above 650. So it doesn't have to be absolute perfect credit. And you don't need to have a credit score in order to get the voucher program if you're truly wiped out. But if you need the loans, you have to be able to show that you're going to be able to repay it.
All right. One of the other things you work in a lot is taxes. You file my income taxes. Thank you very much. I think this is the man who, if the IRS has a problem, they actually come to him to figure it out. But I've had several conversations with people across the city who had some questions about that. And one was, we've taken in a family.
Right.
Can we consider them as dependents and file them as dependents in our income tax?
Okay, so the dependency rules really are very specific in the tax code. If it's a family member and you're helping them out and you're providing the majority support, you may be able to claim them as a dependent. If they're not a family member, unless you provide the majority of their support for the tax year, typically you cannot claim them as a dependent.
All right. So what do you got to keep in mind when you're? Do you need receipts? Do you need all that type of stuff that you normally would when you're filing your incomes?
Well, a dependency status just means you get an extra deduction. So there's a certain dollar amount each year that's inflation adjusted. Usually it's around $4,000.
Yeah, like we do for our kids, for example.
Yeah, that is what a dependency deduction is. It's not a deduction for the amount of food you buy for them. It's not a deduction for clothes you give them. Those types of things, if you give them to a charity, of course you can get a charitable deduction. And of course for those people who got flooded out with physical damage, they get an easier deduction for casualty loss when it's a presidentially declared disaster, because normally it's almost impossible to get a deduction. It has to exceed 10% of your household income before you get any deduction. In a federally declared disaster, presidential declared disaster, that's more liberal on what you can deduct.
All right, the next one was they don't have insurance, their house is underwater, they have to stay someplace else, they were in a hotel. Can they deduct those expenses on their income tax?
Okay, so once again, that would fall in the category of casualty loss. And so what they need to do is keep all of their receipts for both damage to the home and as well as for temporary housing expenses. And when they go to prepare their taxes next year, a lot of that may be deductible. Normally you cannot just deduct your cost of living. So if it's your only place and you're renting an apartment and you're buying food, that's not deductible.
Right.
But if you're paying two at the same time because of the casualty, then there may be some opportunities.
All right, same with a car, for example. Your car is underwater, you don't have that anymore, you're renting a car because you got to get to work.
Right. So in that case, what people should be doing is accessing their vehicle policies, because even if you don't have flood insurance on your residence or apartment, normally a typical auto policy will pay for flood damage as a comprehensive loss.
Yeah, and you could have car rental on there
and
or
you
not.
may have car rental on it, exactly.
All right, and then finally, refinancing help.
Right. So, well, a couple issues there, right? Because some people, if they just bought a new home and now that $1 million home or $400,000 home is worth $100,000 because of the flood damage, they're upside down. Typically, the only place they can refinance would be through the SBA programs, where they can get those disaster assistance programs. Most mortgage lenders, though, if you will call them up, will give you some payment deferment while you're getting back on your feet.
Yeah, all right, Jim, thank you very much for that. And speaking of your mortgage, when we come back, we'll talk about that payment deferment. You got to get in touch with your mortgage company right away. And then other things, if you have to improve your house, because if you had to gut it to take care of the flood damage and improve your house, what does that do to your property taxes? We'll talk about that as well when we come back. Again, Jim Trippon, thank you very much.
My pleasure.